VA Declassified, Secrets of the Home Loan Benefit, where we battle fake news, drop truth, and give you tools to win. I'm Chris Bettis from Fluent Mortgage, and this is...
I'm Eric Bonin. I'm a processor here at Fluent Mortgage.
So today we're going to do question and answer. So for the last month, we've had various realtors and clients call in and ask us questions. So every single month, we're going to bring you what they ask. But real quick, just so you know, a few weeks ago, you met Mike Cook, loan assistant. So he obviously did the tech tuning. Eric, would you tell them a little bit about what you do here at Fluent and then your background too?
So I'm a processor here. I process loans. Been here for about 2 years. Today's actually my 2-year mark to the day. 1 day away from the official anniversary. So tomorrow will be the 3-year mark of Fluent, being in business. Prior to this, I was in the military. I was in the Marine Corps for 4 years, and I attended University of Oregon as an economics major right before this. So I love what I do, and I love helping veterans.
Nice. So just so you know, obviously, you're going to hear my name a lot on VA Declassified. I'm the official face of Fluent, but it takes a team, right, to get to the finish line. So between myself, Eric, and Mike, you will talk to all three of us if you're ever working with Fluent. So what were the questions from the last month?
First question. Christopher asks, can gift equity be used from a family member towards a down payment to lower a funding fee?
Okay, great question. So thank you, Christopher. Just to clarify, so this particular veteran does not have any service-connected disability. So he is looking at some funding fee, okay? It's a second use time using it, so a subsequent use. So usually if you put zero money down, it's 3.6%. His family is gonna sell him his home, and they're gonna sell it to him for less than the value of the property. Alternatively, they can gift equity. So there's marks at 5% down and 10% down, which lowers the funding fee. Eric, I know you know them off the top of your head. 5% down, what does it drop down to from 3.6?
1.6.
Nice, and then if they put 10% down?
1.4.
Exactly. So this veteran saying, hey, I'm being gifted all this equity, can I have my funding fee drop from 3.6, drop down all the way to 1.4? And the good news is, yes. If you work with a specialist, we know how to structure it and make it perfect.
Next question. Ryan asks, 2 friends who are service members and are not married want to buy a property.
Okay, got it. So not married, not domestic partnership. Okay, so thank you, Ryan. Yes, the answer is officially yes. So as you may have remembered back when we talked about entitlement, really this is a question of split entitlement. So you have 2 veterans that are not married, they're not domestic partners. So veteran plus spouse equals just one use of entitlement, right? If you went veteran and fiance, veteran and whatever, significant other, you're putting 15% down typically. But we have 2 vets that are both gonna bring in entitlement. So you can do 0 down, it's called split entitlement. We're good. Realtors, just know though, if we're gonna do this as the transaction together, give me an extra 2 weeks. So kind of like USDA, we get the approval first from the lender, then it gets shipped off to VA, 2 more weeks for them to put their love note or their official thumbs up on the property.
Awesome. Next question is Mike asked, can VA be used on a manufactured home?
Well, yeah, sure, of course. And so we actually get this one all the time because unfortunately, 2 of the biggest VA lenders in the entire United States say over and over that you can't use VA for manufactured. That's not true. That's just them. That's, again, fake news, right? So we're battling fake news. No, they just don't do it. Per rule book, manufactured, no problem, all day long, still shockingly amazing rates. 0 down, let's go.
Sticking with manufactured, Kelly asks, twice move manufactured, can it be done?
Nice, great question. Thanks, Kelly. So absolutely, unlike with the normal civilian loan where, that's almost the kiss of death. So manufactured, built from dealer, delivered to property, 1 move. Then from property, they sell it, someone else buys a used manufactured to a second residence, twice move. So just like the last one, split entitlement, can be done. Give us an extra 2 weeks. Only a couple lenders in the nation will actually do that, the manual underwrite, but absolutely, let's go. Just give me 2 more weeks.
Awesome. And a little question of my own, what's the cutoff date for manufactured?
Oh, so HUD, mortgage has to be very technical, right? So it's not just 1976, it's June 15th. So older than June 15th, 1976, that's gonna be really tough to get done. Pre-HUD, post is June 15th, 1976 or newer. So as long as it's at least June 15th, let's go.
Awesome. Yeah, I get that one all the time.
Same for civilian loans too.
Bob asked, can
Okay.
you get cash out on a VA IRRRL?
Nice. So VA IRRRL, which is technically a no cash out or limited cash out loan. Great question. So a couple different ways you'll get money. First off, you're gonna skip 1 to 2 months, money in pocket. Also, that escrow account, if you're having your lender hold your tax and insurance, that's usually gonna come back to you within 30 days. And then lastly, per rule, you can get up to $500 back. Now, a lot of lenders may cap you at $0 or $1. That's lender specific. So per rule, $500, skip 1 to 2 months, and you can get your escrow money back. So it can be quite a bit actually on an IRRRL.
On an IRRRL. Okay. Sticking with IRRRLs, can I do an IRRRL if the property VA loan now is a rental property or investment property?
Nice. Who was that asked that one?
Ooh, Brenda asked that.
Thank you, Brenda, first of all. Yes, so reminder, the VA home loan benefit is only for your primary residence, only for your home, not rental properties, not investment properties. However, in this case, I believe what Brenda's asking is, bought it as a primary, moved out of that, bought another home using a different loan or maybe VA, and still has retained this property as a rental property. Absolutely, Brenda, no problem since you use your VA benefit. It's a benefit, not a loan. Same amazing if it's today, 2% rates, same IRRRL, no appraisal, no income, no analysis. Let's go.
Awesome. And then another one, a question of my own. What's the best loan product out there?
That's a no-brainer, right? 99 out of 100 times it's the VA home loan benefit. You served, you potentially died for your country, thank you. You took less pay for certain benefits, like the GI Bill, like the VA home loan benefit. So no civilian has anything like you have. It just 99 out of 100 times, we're gonna say VA, so.
Awesome. Well,
Awesome.
thanks for having me on today.
Yeah, so we'll kind of rotate through. If you guys, we'll kind of voting. So we'll bring Mike on next time. I'd be curious to see what the votes are, who gets to be the official co-host. So if you like Eric today, make sure you like, but always make sure you like, make sure you subscribe, make sure you share. This was VA Declassified, battling fake news, dropping truth, and giving you tools. Hope you have an amazing week.